I know you're stressed out. A lot of people right now are very stressed out. They're losing a lot of money and they just can't make sense of the price action. So let me explain to you what could happen next. I have the benefit that I haven't really been trading much since the last month, and I've been in stables. Well, pretty much since then, really. I have put one or two trades on, but it was not too much. It was not a lot of money, so I definitely feel that I'm in sync with the market, and definitely not stressed. And I think that is really important because sometimes you miss. So let me lay out a couple of ideas here. First things first, we just touched the 200-day moving average. All right. I know it's not a perfect tool, but if you look here, we bounce perfectly here and here and here. We spent a little bit of time below it, and then here we also spent some time below it. But at each of these situations, it was actually a good opportunity to buy. Okay, so that's really important. I do know that sometimes we're going to establish us below, and we're in a proper bear market, like here. Here, for example, the price added another drop of 67%. But we are at a level where, again, from a long-term perspective, it makes a lot of sense to be a buyer. So the risk to reward ratio favors the upside here. That's really important. Now, why do I think this is not going to be the case? The reason why I don't think that's going to be the case is because we have a president in the US that have their own meme coin. And that president has said they're going to deliver. So they have about 180 days. They had a plan of, I think it was 180 days, and deliver deregulation in the US, come with different ideas. 30 of these days have already passed. So yeah, the clock is ticking, right? There's going to come some sort of a deal at one point, which I think is going to cause the market to move to the upside strongly. So let's not forget that. So you have Trump, you have the moving average. What else is at a good shape? Well, everybody is very bearish. Look at this, is the fear and greed index, is now at 10. Last time it was at these lows. Ultimately, we bottomed out. So it was a good opportunity to buy. Here, for example, as well, you see this massive sell-offs. Everybody was super bearish. Ultimately, was okay. Here, we also bounced. And here, of course, was the bear market, which was also good. So I'm not saying this on its own is an opportunity to buy, because obviously if we would have bought here and then hold on to it, it would not have been good. But we always need to combine it with technical analysis and risk reward ratios and stop loss. Another thing that is also interesting is this. So we have horizontal support down here, and a lot of people that previously was telling you to buy here, they are saying, oh, we're going to go even lower. And we know what happens when that happens. It doesn't go down. So when everybody's convinced it's going to go down, they want to buy at lower prices, it tends to be the opposite effect. So with that in mind, it's also a very bullish sign. So you have the moving average, you have the fear and greed index, you have people betting on lower prices, and you also have Trump behind you. Now, in the short term, what levels would I look at? I would look at between 80 and slightly below it, but not all the way down to 73. So that's what I'm looking for. Now, I personally think that we can go a little bit lower. And the reason for this is the same reason I told you a few days ago. So a few days ago, I said, we breach here, we trigger this bearish pattern, and we can go down. Now we have some success here. So if you did short, you're probably sitting on a good amount of profit. But I think this little push can squeeze a little bit more. So maybe down to 80, maybe a little bit lower to 77, but around these levels, I think that's a reasonably good level to be bullish and then look for this to the upside. So there's still hope there. At least that's my point of view. What's your take?